Wednesday, May 14th, 2025. Welcome back, everyone. Great to have you with us again.
Hello there.
And believe it or not, this is our 38th conversation already on Finwell Daily Brief. Time flies, eh?
It certainly does. Always a
Right.
pleasure to break down the day's financial events.
Absolutely. Let's jump right in with our financial fact. And this one's, well, quite telling. Get this. Nearly 45% of Indian women investors. They're now picking mutual funds over jumping straight into stocks.
That is interesting.
Yeah. And you think about why, right? Diversified risk, professional management. It just makes a lot of sense, especially for, busy urban professionals. Seeing a real trend here.
I agree. It points towards perhaps a preference for stability, maybe a less hands-on style, which can be very sensible, especially if you're newer to investing or just don't have the time for deep dives into individual stocks.
Exactly. So speaking of the market, let's see what actually happened today. That's the core, isn't it? So May 14th, 2025, at the close, 3:03 p.m. IST, the Nifty 50, it finished at 24,693 points and 50. That's up 115 points, about 0.47%. Pretty solid. Decent gain, yeah.
But hold on, the mid-caps, they really took off. Nifty mid-cap 150 closed at $20,655. That's a jump of 275 points, over 1.3%.
Wow, that's significant outperformance.
Tell me about it. And the small caps weren't slouching either. Nifty small cap 250 finished at 16,041.20. That's up 225 points, 1.43%. So, yeah, the smaller guys really had a good day.
Definitely. That broad strength, especially in mid and small caps, suggests pretty healthy underlying sentiment, I'd say.
Yeah, seems like it. And even the Nifty Total Market Index, the broader picture, closed up too. 12,661.55, up about 101 points or 0.81%. So, green across the board, really.
A positive day all around, it seems.
And it wasn't just stocks moving. Let's look at bonds. The 10-year Indian bond yield, it actually dipped slightly, down to 6.330%, just 0.9 basis points lower. Small move, but noticeable.
And any particular reason for that?
Well, yeah. Seems our own RBI stepped in. They were doing some bond buying, which, provides support and helps keep those yields in check. A bit of strategic intervention, maybe. Quite possibly. The RBI does use open market operations like that to manage liquidity and yields.
Right. And then the rupee. It's strengthened a bit against the U.S. dollar, closed at 85.27. That's up 0.16%. Seems like FII's foreign institutional investors were showing some renewed interest bringing funds in.
Yes. FII inflows can certainly boost the rupee. Lower bond yields and a stable currency.
Yeah.
Generally seen as positive signs.
Okay, so that's the numbers. Now let's get into the stories behind them. The trending news in India today. So picture this. Indian markets are buzzing. The Sensex jumps up a solid 300 points.
Yeah.
And leading the charge. Metals and defense stocks, they were really flying. And there's some market chatter, you know how it is, suggesting maybe easing tensions with Pakistan might be playing a small part, especially for defense.
Geopolitical whispers can definitely move certain sectors, even if it's just sentiment-driven. Defense is a prime example.
Totally. And then, this was big news, April CPI data came in at just 3.16%.
Wow, that is low. Below the RBI's target range.
Yeah, exactly. It's below that 4% target. And immediately, you hear the talk starting. Hopes for RBI rate cuts are definitely picking up steam now. People are thinking, maybe June.
That kind of inflation reading certainly fuels those expectations. The RBI will be watching that very closely for their next policy meeting.
For sure. And speaking of sectors getting attention, EVs, Greaves Electric Mobility, they got the green light from SEBI for their IPO.
Ah, yes, that's been anticipated. Good news for the EV space.
Huge news. And you got to think, this probably catches the eye of, say, NRI tech investors looking at India's growth story, right?
Absolutely. The EV sector is a major theme, and a successful IPO like this just adds to the momentum and investor confidence.
Definitely. On a slightly different track, IPL 2025 updates are doing the rounds online, giving a little boost to some media stocks, as you'd expect.
The IPL effect, yes.
But not all rosy. Indigo seems to be hitting some operational snags, and that's putting a bit of pressure on travel-related stocks. Always a mixed bag, isn't it?
It usually is. Sector-specific news, broader economic data, global cues, it all feeds into the market soup.
Market soup, I like that. Okay, let's dig a bit deeper now into the top financial and economic news. That April CPI at 3.16%. We touched on it, but the significance being below the RBI's 4% comfort level.
That's quite significant.
Yeah. And it's really intensified the debate about a rate cut. People are talking, maybe 25 basis points, maybe even 50. come June.
The probability has certainly increased with this data point. A lower interest rate environment would reduce borrowing costs.
Which is exactly why sectors like banking and real estate perk up, right?
Right.
Cheaper loans could mean more activity there. That's something directly relevant for investment decisions.
Precisely. Those are the classic rate-sensitive sectors that tend to benefit first.
And back to that Greaves electric mobility IPO, it's a big one, €100. SEBI's approval just underlines, how much investor appetite there is for India's whole EV narrative.
It does. It shows confidence not just in the company, but in the broader potential of electric mobility within India. Significant capital flowing into that space.
You bet. Then metals. Wow, did they have a day. The Nifty metal index shot up 2%. You saw big names like Tata Steel, JSW Steel really leading the pack.
Strong move. What's driving that, do you think?
Seems like a combination of things. Reports suggest global demand is picking up and commodity prices are, well, holding relatively stable. That's a pretty sweet spot for these metal producers.
Yes, rising demand coupled with stable input costs is usually very good for margins in the metals sector. It often reflects broader industrial activity picking up globally.
Makes sense. And what about gold, our old friend? Prices held fairly steady, around 94,031 per 10 grams, up just over 1%. So maybe the frantic safe haven buying has eased off a bit.
Perhaps, but it's still holding firm. Suggests that while immediate fears might have subsided slightly, there's still enough underlying global uncertainty, economic, geopolitical, to keep gold supported. It's doing its job as a hedge.
Good point. Still relevant. Okay, one last thing here looking overseas. US CPI data for April came in at 2.3%, just a touch lower than forecasts.
Ah, okay. And the market reaction?
Well, it seemed to calm fears, about the Fed having to delay their rate cuts for too long. Less inflationary pressure there might mean the Fed can ease off sooner rather than later. And that usually helps sentiment here, especially for our IT stocks, right? Given their U.S. ties.
Exactly. Lower than expected U.S. inflation reduces the pressure for aggressive Fed tightening, which is generally seen as a positive for global risk assets, including Indian equities, and particularly the IT sector, due to its significant U.S. revenue exposure. It's all connected.
It really is. Okay, so pulling all of these threads together, what's the big picture, the market outlook and analysis for today?
Well, summing up, clearly a strong day for the broader market, but particularly for mid and small caps. Metals and defense were the standout sectors.
Right. And we saw bond yields dip a bit thanks to that RBI support, and the rupee got a little stronger, likely from those FII flows.
Correct. And that low CPI print is really the key domestic story, isn't it? Fueling those rate cut hopes, which could potentially benefit banking and realty.
Definitely the main driver of sentiment today, I think. But we always need a but, don't we? We still need to keep an eye on those potential U.S. tariffs hanging out there. That remains a risk factor, could bring back some volatility.
Absolutely. Domestic positives are encouraging, but you can't ignore potential global headwinds like trade disputes.
Well,
always need to be watchful.
So true. Okay, let's turn this into some concrete ideas then. Investment themes based on today's action, what jumps out?
Okay, well, first off, those rate-sensitive sectors we mentioned, banking, real estate. If you believe rate cuts are coming, these could be beneficiaries. That's one theme.
Makes sense. What else?
EVs, naturally.
Yeah.
With the Greaves IPO getting the nod, it just highlights the ongoing growth potential there, especially for investors interested in, tech-driven growth.
Right. The EV story continues. Third.
Metals. We saw the strengths today. If you think this global demand pickup and stable commodity price environment has legs, then playing the commodity upcycle via metals stocks could be an option.
Okay, metals as a cyclical play. And finally,
maybe gold ETFs. As always, for diversification and hedging against unexpected bumps in the road, market volatility is always a possibility.
Good old gold. Okay, so banks, realty, EVs, metals, and gold ETFs. Some interesting themes to consider there.
Just ideas, of course.
Yeah.
It needs proper research based on individual goals and risk appetite.
Of course, of course. Which brings us nicely to risk management. Always crucial. Any thoughts on managing risk in this current environment?
Well, diversification is key, as always. One possible approach, just as an example, might be something like, say, 60% in large caps for stability, maybe 30% in mid and small caps for that growth potential we saw today, and perhaps 10% in debt or gold for cushioning.
So a balanced allocation, 60-30-10 roughly.
Something like that. But the main thing is having a strategy. And crucially, keep watching the signals. What the U.S. Fed does, what the RBI does, especially around their June meetings, those policy cues will be vital.
Absolutely vital. Monitor those central bank signals. Okay,
Yeah.
Sound advice.
It's about being prepared.
Right. Okay, folks, before we wrap up, just a quick word. If you find these discussions helpful, if you want to stay on top of these financial developments without getting lost in the jargon, then please do consider subscribing to Finwell Daily Brief.
Yeah.
We try to break it down, make it engaging, give you the insights you need every day. It's really about staying informed easily. And hey, if you have questions or want to chat more about anything we've discussed, find SOS Finwell on LinkedIn. Drop us a message. We'd love to connect.
Yes, engagement is always welcome. Staying informed consistently is so important in finance.
Couldn't agree more. Okay, let's quickly summarize today then, May 14th. Indian markets ended positive. Mid and small caps outperformed nicely. Low CPI data plus RBI action boosted those rate cut hopes, potentially good for banks and realty. EV sector got a boost with the Greaves IPO news. Metals rallied strongly.
Yes.
But we need to watch out for those potential U.S. tariffs as a risk factor.
Always keep risks in mind.
And remember that diversification idea maybe, that 60-30-10 split between large, mid-small, and debt gold as a way to manage things.
A sensible framework to consider. Adaptable, of course.
Right. Okay. And to leave you with something to think about, here's a great quote from Warren Buffett. The best investment you can make is in your own abilities.
Ah, classic. And very true. Constantly learning, improving your own understanding. That's invaluable in finance and life, really.
Well said. Okay, just the usual reminder. Everything we've discussed today is for information only. It's not financial advice. Please do your own research. Talk to a qualified advisor before making investment decisions. Markets involve risk. Data changes. You know the drill.
Absolutely crucial disclaimer.
So don't forget to subscribe to The Brief. Connect with SOS Finwell on LinkedIn if you like. And until our next chat, happy investing, everyone.
Indeed, until next time.